Considering an investment in Taiwan Semiconductor? Exercise caution. The stock seems pricier and carries inherent risks. Taiwan Semiconductor, or TSM, is a key player in the tech industry, but their Q3 results, set to be presented this Thursday, warrant a closer look. The expected earnings per share, or EPS, has seen a significant decrease, dropping by over a third from last year. This takes us from 1.54 per share down to just 1.17 per share. That's a decline of over 24%. On the revenue front, the story isn't much brighter. We're looking at a projected decline of 13%, year over year, moving from $20.319 billion to $16.654 billion. That's an 18% reduction. Despite beating their EPS and revenue projections last quarter, TSM is now forecasting a drop in both metrics. Let's delve into the Q2 financial highlights. The period saw a sequential revenue decline of 5.5% in NT or 6.2% in USD, a clear reflection of the global economic landscape's impact on performance metrics. The gross margin also took a hit, decreasing by 2.2 percentage points to stand at 54.1%. This was largely due to higher electricity costs and lower capacity utilization. The operating margin didn't fare much better, declining to 42%. Despite these challenges, TSM reported an EPS at NT 7.01, with a return on equity of 23.2%. On the brighter side, advanced technologies, mainly the 7 nanometer and below, made up a commendable 53% of the revenue. However, it's worth noting that there were noticeable decreases in the revenue from high-performance computing, smartphones, and the Internet of Things. What about their financial position and Q3 projections? Let's delve into this. By the end of the second quarter, TSM's cash and marketable securities totaled a significant $58 billion. On the flip side, their liabilities experienced a decrease, while long-term interest-bearing debt saw an increase. In terms of cash flow and investments, the company generated a whopping 167 billion Taiwanese dollars from operations. They allocated 251 billion for capital expenditure, resulting in a negative free cash flow for the quarter of 83 billion. Looking forward to the third quarter, projected revenue ranges from 16.7 to 17.5 billion, marking a 9.1% sequential increase. They forecast the gross margin to lie between 51.5 and 53.5%, with an operating margin between 38 and 40%. While TSM has shown some impressive metrics, they are currently projecting reductions in several areas. Weigh these factors carefully when considering an investment. For more information, the description is below to join a community of like-minded traders.
Arieous Invest. Trading reimagined.